Hey everyone, welcome to Primary Market Chatter brought to you by Sunday Investing. This is our September second week IPOs edition. It's a slightly unusual week. Usually हम Sundays को करते हैं अपना Sunday Investing का space of Primary Market Chatter. We are doing it on a Tuesday because there were no IPOs. Is it Wednesday today? Sorry. We are doing it on a Wednesday because there were no IPOs which were super interesting before. So we wanted to just wait it out and also see some of the anchor books क्योंकि जो तीन मेन बोर्ड आईपीओस 12th को क्लोज हो रहे हैं वो वो अभी उनकी एंकर बुक आ गई है सो वी विल बी इन अ बेटर प्लेस टू काइंड ऑफ talk about them. That is why we wanted to essentially wait. Having said that, let me probably get started for the day. Before we get started, let me set up the agenda like I usually do. A few housekeeping announcements. We will, like we are not SEBI registered. Do not think of whatever we say as a qualified opinion. हम जो भी बोल रहे हैं, that is not like that is not replicable. We don't understand your situation. You don't understand our situation. Definitely do your own due diligence and think of us just discussing our own IPO strategy, but do not try to copy or replicate. आप अपने financial advisor से बात करके ही decision लें. Having said that, the second thing which I want to highlight is again that if you haven't joined the YouTube channel for some reason, the space that we do, हम जिन भी companies की बात करते हैं उसका recorded version हम इस पे भी डाल देते हैं channel पे. So you can go ahead and listen to these IPO reviews at your own leisure. Having said that, you will always see that we also have conflicting opinions. Like last week, there was one famous SME where a couple of us were in the apply camps. One of us was in the avoid camp, but that is life. Like we'll always have conflicting opinions. It is natural for a group of 5, 6 people to not agree with everything, and we learn basis that. So having said that, maybe let me just someone will be right sometimes, other person will be right the other time, and whenever someone's right, he can tell us that he told us so. Having said that, let me kind of set up the order for the day. We'll probably start with one SME carbon steel. कार्बन स्टील की बात करेंगे उसके बाद मेन बोर्ड पे जंप करके we'll talk about देव एक्सेलरेटर्स. No, we'll first talk about Shringar and then we'll talk about Taurian MPS. उसके बाद देव एक्सेलरेटर की बात करेंगे and we'll end with urban company. I know a lot of people want to listen to urban company as well, so we'll do urban company as well, and it would be a good review that we wanted to talk about, but we just are holding on till we move to that review. So having said that, without much ado, let me just quickly set up carbon steel and get started. We'll try and keep it quick and hopefully cover everything by 10:30. Setting up carbon steel, it's established in 2011. Company provides structural engineering and fabrication solutions. Steel plants, railway bridges और PEBs भी बनाती है साथ में, but majorly steel structures बनाती है with a combined capacity of 32,400 metric tons per year. एक कंपनी आई थी एटमास्को करके, seems like a very similar company to this in terms of at least the high level one line that I read. We'll try and understand more about the company. In terms of the IPO, it's a 59 crore IPO, 48 crores का fresh issue है, 11 crores का OFS भी है इस कंपनी में. मार्केट कैप की बात करूं तो मार्केट कैप 225 crores पे कंपनी आ रही है. So dilution is like what? 27-28%, the minimum required dilution. FY25 financials की बात करो तो revenue 274 crores है, PAT 14 crores है. So 14 crores पे कंपनी 225 crores के market cap पे आ रही है. So like 16 p if I'm not wrong. हाँ 16 के PE पे आ रही है. LM की बात करूं तो LM Serene Capital है. Rather new LM, but दो issue आ चुके हैं. Is linked to a old LM which had went out of business, but seems to be managing well, at least the two issues that they have brought in from my understanding. With that, over to you, Saurabh, to talk about carbon steel.
Hey, thanks, Manish. Am I audible?
Yep.
Hello, can you hear me?
Yeah, we can hear you, Saurabh.
Okay. So carbon steel engineering in a broad sense, this is a structural engineering and fabrication company. So currently it is run by second generation promoters. Uh, Seem very knowledgeable and humble in all the interviews, well spoken, knows the business well. Has a good CV, also well educated person. So I've been watching a few interviews of his and seems a very well spoken guy. So primarily they do design, fabrication and assembly of heavy and precision made steel structures. So these are like custom made steel structures. They made almost tailor-made, bespoke kind of products. Usually used in like steel plants. They've started doing some railway bridges. We'll talk about those a bit later. They have clients in the oil and gas industry, refineries. They have chemical plants, other industrial units, and they've also like recently started getting some traction in subcontracting in data center and commercial like high-rise building related work. So client list is quite impressive. They have ArcelorMittal as a client, the steel plant coming up in Hazira. So that's a big client for them, a big source of revenue for them. They have other good client lists like Tata Projects, uh, JSSL, the joint venture between JSW and Severfield. So Severfield is a UK, I think UK if I'm not wrong, UK company that is in the same sector. It's one of the largest companies globally. So these guys supply to them. Uh, like I said, ArcelorMittal is probably the biggest client, although I think that data they have not provided. And incidentally, a funny tidbit is that one of the promoters' name is also Mittal. So his first name is Mittal, which I found a bit humorous. They have two manufacturing facilities, one in Umbergaon in Valsad in Gujarat, and one in Khopoli in Maharashtra. Khopoli is the older one. It started in 2014, and the Umbergaon one started in 2017. So they've been around since 2011. I think initially they've done a bit of trading in steel products, and they moved into manufacturing in 2014 in Khopoli. The combined capacity of both the facilities is 36,000 metric tons per annum, and they have been using the Umbergaon facility more. It looks like, because that is at 95% capacity utilization almost, and the Khopoli one is 67% utilization. So I think vicinity to the Hazira plant, which is going to be the world's largest single location steel manufacturing plant by ArcelorMittal. So they get a lot of orders from there. In fact, in one of the interviews, they said they have to, like, they don't have the capacity to cater to all the orders from that single plant itself. They have to let go a lot of business. So one of the reasons for the IPO is the capacity expansion of that plant. So we'll come to the uses of the funds later. So this business sales is very, reference based repeat order kind of business. So they have like almost 96% of their business is repeat orders. A good track record, very no instances almost of, a non-delivery or delayed delivery. They seem to have good technical expertise. And in terms of the demand also, next 3-5 years, I think a lot of the demand will be driven by sustainable and, environment friendly buildings, which use a lot of steel structures nowadays. So in fact, they recently received an order from a EV battery unit as well. So a lot of the new age, new technologies in manufacturing and commercial buildings, they require these steel structures, heavy steel structures that are precision made. So, good traction for them in those areas. So, coming to the railway bridges part, so they've got a couple of orders from the bullet train project. So, one of them is like the largest unsupported bridge, the tolerance limit of 2 mm. So, you can imagine the kind of precision that they need to execute. And in fact, they were saying that they're one of the, I think, one of 4 suppliers that got the RDSO approval for this. So they seem to be good, in a good place technically. So as of July 31st, the order book was about 330 crores. Uh, uh, yeah. In terms of employee and headcount, they have about 381 employees on the payroll, and additional about 100 contract workers. Um, so in terms of, what is their USP and core strength, they claim that most of their peers don't have the ability to handle, very large members, steel members. So about up to 40 tons that these guys can handle in their workshops, none of their peers are able to handle. So a lot of the peers, they win orders on basis of this ability. Like the peers won't have the space itself because 40 tons is huge. It will require a lot of space just for manipulating the member and assembly. Uh, in terms of risk factors, I think they have a slightly high supplier concentration. Like top 10 suppliers supply almost 60% of their cost. Uh, Customers also, top three customers account for 90% of the revenue. This is mostly because of, like I said, the Hazira plant gives them a lot of orders, and I suspect one of their plant, the Umbergaon plant, is almost captive right now. Not out of design, but that's the way it is. Like they get so much business from that one place that that entire plant works over there. The another risk, labor for them, Dishan. I think the Umbergaon plant has almost 100% attrition. And they say that the labor is kind of seasonal in India, so skilled labor tends to migrate back to North India and don't come back, or even if they come back, they get counted into the churn number. So that is an issue for them. Managing that is something that they're working on, they say. So in terms of using of funds, the IPO size, like you said, is 59 crores. 12.5 crores of this is for capex for increasing the capacity at Umbergaon. From I think the total capacity will go up from 36,000 MTPA to almost 48,000. So they have a huge plant over there. They are almost 20 acres. And even after this expansion, they're saying they'll be using almost only half of that. So in future as well, they're planning like 6,000, 7,000 metric tons per month. They'll be able to expand to. 25 crores is for working capital. Sometimes this is looked to as a negative, but they have a very high working capital requirement. Like their working capital inventory days is almost 80, 90 days, and working capital is almost 88 crores. So I think it's prudent. 25 crores, they get this, most of this is like OD and line of credit facilities at 10 to 12%. So makes sense. 25 crores for working capital. There's a OFS portion that's 11 crores and about 3 crores of repayment of debt. Uh, Coming to financials, they've grown financials consistently in FY24, about 40% growth on top line. FY25, 25% growth on top line. They operate at about 5% PAT, EBITDA about 13%. So the peers they mentioned, like you said, is Atmasco, one of the you rightly identified, and another one they mentioned in the RHP is Good Luck. So both of these companies are like 25 plus PE right now. I think Good Luck is slightly lesser, 23%. Atmasco also has some defense work, right? So it's a little more diversified. I remember something on the lines of they're doing something like bulletproof vests or something is one of their products. So I don't know. I think maybe in terms of valuation, this is coming at 16 PE, so a slight discount, but it will be at a discount to Atmasco, which is at 27. But still, I think there's enough 20-30% at least to valuation gap, margin of safety for this company. Overall, I think some margin of safety is there. There's good visibility of revenue and growth for the next year. So I think, personally, I would apply for this. I don't know whether I would hold, maybe for slightly longer term, but a 10-20% listing pop I should expect in this. Subscription has been slightly low. I think last I checked was 3x. So yeah, I would apply, but not like go very all in for this. So yeah, that's about it.
Understood. Thank you. Thank you so much, Saurabh. Just a couple of questions from my end. From what I understand, Itmasco में थोड़ा defense वाला भी angle है, right? So there's that optionality which should be factored in the PE as well, right? So this should ideally trade at a slight discount to that because उसमें वो optionality they are able to execute their jacket business, right? So like so the precision, etc. Do you think these are slightly more technically capable to Itmasco at least from what their read was?
Yeah, Manish,
And
I think.
second, anchor book वगैरह में anything that you saw?
Yeah, I think technically they are slightly better. I think they do tailor-made products जो इनका है इनको repeat order भी मिलते हैं and almost all of their business is referral based. So marketing वगैरह ज़्यादा करते ही नहीं है. तो seems like they have a good track record over there and good expertise. Or Anchor, to be honest, I have not seen in detail. Uh, so let me
Got
just
it. No worries.
quickly.
Yeah, no worries at all. I was just checking if you have. But yeah, seems interesting. Seems like some space on left on the table per se.
Yeah.
We'll
Anchor
see.
book is also
Uh,
good. Good anchor book.
okay. I just opened it. Seems like a big anchor book. 10,000 नाम है. Got it. I can see a couple of known names. But yeah, with that, maybe we'll cover carbon steel and then move probably to the second company. The second company we'll talk about is Shringar House of Mangalsutra. Let me set up the company. Very interesting name for a company. It's a Mainboard IPO. Established in 2009, company designs, manufactures, and markets a diverse collection of Mangalsutra featuring various stones like American diamonds, cubic zirconia, pearls, semi-precious stones using 18 karat and 22 karat gold for its B2B clients. तो कंपनी बेसिकली मंगलसूत्र के अलग अलग प्रकार बनाती है. व्हाट इज इंटरेस्टिंग, मेरा पहला क्वेश्चन ये है कि सिर्फ मंगलसूत्र ही क्यों, व्हाई नॉट लेट्स से रिंग्स एंड your bracelets of the world. But yeah, we'll come back to it when we check on the company. In terms of the IPO, it's a 401 crore IPO. So 400 crores का raise है. Market cap 1591 crores है, 1500 crores है. Interesting tidbit. After you go above 400 CR raise, you don't need to do the minimum dilution of 25% from my understanding on Mainboard, which is what I recently came to know. उससे पहले मुझे नहीं पता था. तो 400 तक तो आपको 25% डाइल्यूशन करना ही पड़ता है. In terms of the FY25 financials, by the way, all of it is a fresh issue, no OFS as such. In terms of the FY25 financials, revenue 1430 crores hai, PAT 61 crores hai. So decently valued. It's coming at like 27, 28 PE trailing. In terms of the LM is choice capital. So with that, over to you, Tanmay, to talk about Shringar.
Is my voice clear?
Yes.
So Shringar House of Mangalsutra Limited is a leading Mangalsutra manufacturer, which deals in 18 carat to and 22 carat category in the B2B segment. Okay, so the company has got 6% market share in the organized Mangalsutra market in India. The company sells their uh, products majorly to the corporate clients. It has got three categories. One is the retail chain, one is the wholesale jewelers, and third is the single store retailer. So I'll just give the bifurcation key like konsa kya hai. In retail chains, it is like your Malabar, Tanishq of the world. And distributors, what they do is they have some partners which help them to boost the sales, as in if the company is selling their products at like roughly like 8 9 10% gross margin, these guys take another 2 3% and pitch it to the other retail chains. So it is like you know uh, the company produces the products and they sells to the wholesalers, and the wholesalers sell it to the retail chains. And third is a single store or retailers which has got only one stores, majorly into your tier 2 and tier 3 cities. The company has got some marquee clients like Titan, PN Gadgil, Manoj Vaibhav, Kala Mandir Jewelers, GRT, DP, Goldbox, Joya Lucas, Reliance, Dumas, Vamana Repete. So they have got like, very high quality clients. Till now they have served to 34 corporate clients, 1090 wholesalers and 81 retailers. The company also exports to 5 countries, which includes US, New Zealand, UK, UAE, and Fiji. In India, they supply their products to 24 states and 4 union territories. The company has got 15 collections and they have got 10,000 plus active SKUs. Coming on the raise, the company is raising 401 crore, completely a fresh issue. Out of which they are embarking 280 crores towards working capital and rest 121 crores towards GCP. I'll come on the working capital part at a later point, as it is important to tell the inventory churning and the potential revenues. So the company has got one facility in Lower Parel, which has the capacity of processing 2500 kilograms per annum, and at this point like 60 and 70% type का इनका capacity utilization है. Now we'll come on the working capital, so it will help us to understand कि कितना potential है इसका. So their inventory days is close to 50 to 53 days and trade receivable is 21 days. So मोटा मोटी 70 से 75 दिन में इन्होंने FY24 में एक cycle घुमाया था. So this translates into like roughly 5 times cycle of the working capital in 1 year. I got just one message that my voice is not clear. Can anyone check?
No, I can hear you fine. Go
Okay,
ahead.
okay. So the company turns its inventory 5 times a year. Like I've just added up the inventory days and trade receivables. So, like if the company gets like 1 crore as a working capital, वो उसका 5 crore का potential revenue कर सकती है. Yes, before discounting the margins on top of it. So now coming on the financials, FY23, the company did a revenue of 951 crores and PAT of 23.4 crores. EBITDA margin was close to 4.1%. In FY24, the company did a revenue of 1102 crores and PAT of 31 crores, which was like roughly 16% rise in revenues. But mind well, the volumes had risen by roughly 40%. In FY25, the company did a revenue of 1430 crores and PAT of 61 crores, and EBITDA margin have shot up from 4.6 to 6.5%. And volume growth was, I guess, minus 2%. Okay. And revenue growth of roughly 30%. So now, like, you need to understand that the volumes have not grown in FY25, rather they have degrown by roughly 1.52%, but the value has increased given the rise in the gold prices, okay? And it has been the industry phenomenon कि आपका gold का price 10% से बढ़ने दो, आपका volume 2 से 3% से घट जाता, still they have managed to at least be like minus 1% types, minus 2%, and not have seen like minus 5, minus 10% kind of a decrease in volumes. अभी इसमें एक चीज ये भी है कि the EBITDA margin have shot up from like 4.6 to 6.5%. But let me tell you, like we have seen in majority retail chains and B2B players that 1.2% kind of EBITDA margin has been on the back of like increase, sudden spike has been in the on the back of inventory gains. Let's say what is inventory gain? एकदम सरल भाषा में समझाऊंगा. Let's say I purchased gold bars at like let's say 100 rupees. And till I sold my jewelry, like I processed the jewelry, I manufactured the jewelry, I converted and then I sold. तब तक वो सोने का वो 115 हो चुका था. Like उसके अंदर, so that 15 rupees is my inventory gain, ठीक है? So in majority chains and I would say less in chains but more into B2B, FY25 has seen, I guess, slight, inventory gain. So I feel, 6.5% EBITDA margin है, likely it won't be sustainable. Like I'm not saying 6.5 हो नहीं सकता, वो हो सकता है. But you need to have like, इसमें अभी दो चीज है. First is, you need to have that increase, like solid increase in that like gold price trends so that you can get those inventory gains again. And second, or other could have been increase in the more value added and like high margin products. जो इस industry में it is not easy given like your traditional products like account for roughly 85 to 90% of your revenues, and the emerging designs or the sets like are for 10 to 15%. So I feel ये जो 1% है, 0.8 to 1.2% EBITDA margin, ये आ भी सकता है, जा भी सकता है. It cannot improve from here for sure, but it can be minus in case the things don't work out. And if you just look at the, IBJA, like Indian Bullion Jewelry Association, कुछ तो है इसका full form. So if you look at their report, they expect to gold rate to spike at like 10% from the average of FY25 to FY26. So इतना समझ लो कि कंपनी वैल्यू वाइज पे 13 से 14% इंक्रीज कर देगी, गिवन H1 हैड अ strong, always the jewelry companies in the B2B segment have a strong quarter, given कि दिवाली में आपका marriage, आपका जो पीरियड होता है वहां पे सेल ज्यादा होता है, बट B2B का स्टार्ट वर्किंग फ्रॉम लाइक 2 months प्रायर, तो आपका H1 लाइक स्पेशली Q2 हैवी होता है फॉर B2B बिजनेस एंड Q3 फॉर द रिटेल चेन. सो Q2 में आपका जो गोल्ड था दैट हैड शॉट अप वेल, सो आई फील वो वैल्यू वाइज 13-15-16% जो जंप है वो तो अपने आप आ जाएगा गिवन गोल्ड हैज इंक्रीज्ड. एंड द वॉल्यूम ग्रोथ लाइक शुड इज अ क्वेश्चन मार्क, एंड वो मोस्ट लाइकली आ जाएगा गिवन द कंपनी इज रेजिंग लॉट ऑफ वर्किंग कैपिटल. Now coming on the debt part, the company has 123 crore ka debt. It's mostly a working capital debt only. Uh, And if you look at, the IBJA report, and if you just convert those at your 18 and 22 carats, so it would look like they're expecting blended level per roughly 1 lakh, 98,000 to 1,03,000 type of gold rate. I'm saying for blended for 18 carat and 22, not for 24. ठीक है. So if you just look at inventory, वहां पे मोटा मोटी 13 से 15% का easy gain हो सकता है. So if I just calculate कि जितना वर्किंग कैपिटल उठा रहा है proportionately for the 5 months, given that 6 महीने का तो हो गया साल को, और 1 महीना वो एस्क्रो अकाउंट से पैसा आने में लग जाएगा, so that 5 months, and for the like 45%, 40% for in the H2, and given the turnaround days, तो ये मोटा मोटी 18,500-19,000 करोड़ का टॉप लाइन कर सकते हैं. Given that they are using it, and like for sure demand has been great in the jewelry, and the jewelry your wedding season was also quite great. So FY26 में like I'm keeping the EBITDA margins like I would get 0.5%. I'm decreasing, and the PAT comes to like 75 crores types, which is like increase from 61 to roughly 75, and top line is on a good note. It is like roughly I guess 30% type ka, 25 to 30%, given 10 to 12% of volume growth, and like 15%, 17% kind of a increase in the gold prices. So now coming on its valuations, कंपनी आ रहा है मोटा मोटी 1590 करोड़ के वैल्यूएशन पे. So if you translate, it comes at like roughly 28 times 27, 28 times 25, and 20 times 26. Abhi the good question like which Manish bhai asked ki why only Mangalsutra? So the company is I guess 2008 की बनी हुई, so it is a 17 years. But if you look at the promoter, Mr. Thadeshwar, ठीक है, he has been in this industry from like 41, 42 years, what he had spoken in the interview. So he's saying that I have got my name by making name in the Mangalsutra market, and I don't intend to diversify as like when a retail chains wanted to procure the Mangalsutra, the first choice is ours. So he says I want to continue that legacy and don't want to diversify unnecessarily, as the market itself is like growing at a like I would say high single digits, and it is poised to do well. So that was his answer to it, but I know it is not a very technical answer, but like kind of a sentimental answer. So a good thing in the company is zero litigations against against the company promoters. कोई टैक्स का कुछ चक्कर नहीं है, कुछ क्रिमिनल वाला चीज नहीं, कि एक छोटा सा टैक्स है वो 32,000 रुपए का है. सो दैट इज नेग्लिजिबल. दैट इज ऑल्सो अगेंस्ट प्रमोटर. पुराना केस है. 32,000 डजंट मेक मच. तो एंड इफ यू जस्ट लुक एट लाइक FY27 तो मोटा मोटी 15 टाइम्स पे आ रहा है. सो आई फेल्ट की वैल्यूएशन शायद 1300-1400 होता तो शायद और बेटर होता, बट इफ आई जस्ट लुक एट लाइक आई गिव इट लाइक 25 टाइम्स 26, तो मोटा मोटी 15 से 20% का गैप खुलता है. सो आई वुड सजेस्ट कि यार आप लिस्टिंग इनके लगा दो, लाइक small 15% type का listing in, like hypothetically, and for long term you can keenly observe the Q1 Q2 numbers and wait for the commentary to take a call on the long term, but overall the company is good. And LM's choice last type was Shanti Gold, which is doing decent, 20-25% ऊपर from the issue price. Prostam is almost double. Both have done well. So I feel this is overall on Shringar, good company, good promoters, valuations reasonable, सस्ते हो सकते थे. Small scope left for listing gains, good for long term in case the commentary is good and Q1 Q2 is seeing some upbeat.
Got it. Just one correction. Long term के लिए लगा दो नहीं, long term के लिए मैं लगा रहा हूँ. So that is what you need to say.
नहीं वही है यार. Like honestly बोलूँ ना, the company is quite good because it should get a premium over the like at least Shanti
No,
like if
all I'm saying is we can't really recommend it.
no, we are not recommending. Like we can take a call based on the Q1 Q2 results and the commentary for sure, because यार gold का ना कोई ये नहीं, because आपका geopolitical issues बहुत सारे, तो it cannot be a hyper valued company, and neither a cheap reason being the niche and the legacy in the sector and good growth ahead.
I'll tell you one thing which somehow is not like sitting well with me from what I've seen, at least on ground. gold jewelry shops have been like have had a weakish quarter, right? Q2 was weak. Q3 I think would continue to be on that trend, right? Because the gold prices are so high that it has essentially became people are slightly holding back. So maybe that is one reason why I'm slightly like, and again, like Shanti Gold में मुझे उस समय समझ नहीं आई थी pricing and the rate at which the company came. Utsav was much cheaper. I would say the same thing for this guy as well. This is a B2B guy end of the day, right? So you still have a Utsav who's cheaper, but then markets will do what markets do. So that is what our review is. Tanmay, you have anything to add, or we can quickly move forward to
But
our
also,
next
I
issue?
just missed a point upon the Anchor book. So Anchor book was quite good. It saw some I guess Universal Sompo took a good chunk. Then we saw Madhu Kelaji's fund, and we saw again couple of good funds. I'll just check it out the list. I guess I'm missing on two three names. Uh, So Kotak Mahindra Life Insurance took a big chunk. Maybank Plutus, Plutus was an interesting name. Like you generally don't look on the Anchor book. Founders Collective, Madhu Sudan Kelaji's fund, and then all your normal funds, which are like your regular, small IPO driven funds. So I feel
Perfect.
Plutus also interesting.
Perfect. Thank you, Tanmay. But yeah, with that, we have covered Shringar. Let me, in the interest of time, let's move forward and talk about Taurian MPS. We'll probably be slightly faster with the next two, Taurian and DevX, because I understand we need to keep some time for Urban, and hopefully I'm hoping we can close on time. The setting up Taurian, incorporated in 2010, the company manufactures and supplies jaw crushers, cone crushers, VSI crushers, vibrating screens, washing systems, and complete crushing plants under the Taurian brand, advocating for Make in India production. So it seems like it makes a lot of these cap goods which are used in terms of like industries. एक बार समझेंगे when Sachin is explaining the company in terms of the IPO. It's a 42.5 crore IPO, all of which is a fresh issue. Market cap 152 crores है. So again, like 28% dilution. Financials की बात करते हैं for 25 financial revenue 74 crore, PAT 9.5 crore, तो again 16 PE पे आ रही है. It's interesting how almost all companies have now made the base as 15, 16 PE. Earlier it used to be 12. In terms of the LM is Greatex Corporate. So that is with respect to Taurian MPS. Maybe Sachin, do you want to go ahead and cover Taurian slightly quickly? Thank you.
Am I audible? Hello?
Yes, you're audible.
Audible, right? All right.
Yes,
So,
yes.
this Taurian MPS, they were established in 2010. Earlier they were named Rashi Resources, but the business was similar. The Taurian and this Rashi Resources business is similar. So now Mr. Yash Bajla is handling this business. He's a second generation. Earlier it was the Rashi Resources was handled in some parts by his father, Mr. Sumit Badla. I will come on that father thing later. So this Taurian specializes in industrial solutions for mining, construction. They offer crushing machines, screening machines, conveying, purifying sand, etc. They also offer some hybrid track-mounted equipment as well. So these hybrid ones save almost 40 to 50% cost than the traditional diesel systems. This is why the hybrid ones are now are now being preferred more than these traditional ones. They also have one joint venture for their exports with a European EPC contractor. So this is for largely for the exports in countries like Brazil, Angola, Portugal, etc. Currently, they are utilizing around 35 to 40% of their capacity across 4 units that they have. Client and the customers that they are catering to, they have increasing it year on year from around 10 to 15 customers in FY22. Now they cater to almost 90 plus customers. So that suggests that they are gaining market share in that region as well. Also, they claim that they are one of the few manufacturers to make high quality crushers that run around 800 tons per hour. So that is their advantage in this crusher segment. There are other few players as well in this crusher segment. There is Propel, there is Pazlona as well. These are unlisted players. And apart from this, there are the bigger players that are global peers. So that is for this crusher thing. Now, the working capital is one thing that is to note. Around 3 to 3.5 months they take to manufacture the machines, and after that around 60 to 70 days is for the product dispatch. So around 3.5 to 4 months they take for product dispatch and complete rollover of their products. Which is why we see that the inventory days are quite high, around 200 to 205 days of inventory is visible. They have a current order book of around 43 CR, with 60% from it is from exports and the rest is from domestic. For the protection of export orders, they generally take 20 to 40% of advances from the customers. One slight thing is that they also are now trying to enter into one lactose processing. So this lactose processing is what ये same machines lactose processing use करते हैं, जैसे ये crushing and maybe refining and maybe conveying की जो same machines है वो lactose processing में भी use होती है. तो they are trying to venture into that segment as well, just to diversify and maybe increase their clientele. Now to coming to the financials. In FY23, they did 10 CR of revenues with 20% EBITDA. In FY24, they did 44 CR of revenues. EBITDA was similar, but the PAT looks higher because there was one-time office sale. So if we normalize the PAT, it comes to around 12 to 13%. And in FY25, they did around 74 CR of revenues with similar EBITDA of near 20% and the normalized PAT of around 12 to 13%. For FY26, given that they already have inventory from FY25 and they are also targeting higher inventory for FY26, they are looking to close around 130 to 140 CR of revenues. And they are also looking to increase the exports to around 40 to 50% of the revenues, and that largely brings the PAT to a higher level, around 14 to 15% PAT for FY26. And going forward in FY27, they are targeting around 18 to 20% of PAT. So this also comes with the fact that they are also trying to expand in South and Northeast India as well, and they are also they are also looking to increase their revenues from spares and services that they offer, the AMC services for their machines. There are slight risks to the business, which I already told about the working capital cycle. Very high working capital cycle, inventory stocking is there. So they are trying to reduce it by these IP proceeds, which I'll come on that later. There are some auditor qualifications as well in the past for these trade receivables only, but nothing in the current year of FY25. Mr. Sumit Bajla, who is the father of Mr. Yash, so he already had a venture of this iron and steel business, but it was somehow liquidated and wound up because of some debt or some other issues. So that is one slight thing in the family background, if I can say that. Now for the IPO use, around 23 CR is for working capital alone, and they are largely using this in the FY26 as well. For the rest 8 CR, they are getting some new machinery, and they are also doing some R&D in this new machinery just to make some new product formulations to maybe expand their clientele and gain more market share. Now coming to the pricing, there was a pre-IPO done in July to August 24 at 139 per share. It includes some HNIs, one India Inflection Fund. India Inflection is literally Pantomath. So Pantomath is India Inflection Fund. Pantomath did not bring this IPO as lead manager because maybe they are trying to focus more on Mainboards, so they are not leading this issue. Now what they are projecting is around 130 CR revenues, as I told. So they are coming at around 8 to 9 times forward and around 12 to 13 times trailing. They are unlisted players, this Propel and Puzzlona. They each have a good domestic market share, and they have revenues around 17 to 1800. So almost around 10x bigger than this Taurian MPS. And they generally have better quality products for the domestic part. Taurian has good quality products for the export part. There is also one listed player, Tega Industries, which trades near 60 times. And it has almost similar margins like Torrents, both on the EBITDA level and the PAT level. But somehow their growth is not visible, so they are degrowing year on year. LM here is Greatex. It has been decent enough, but their listing can surprise, as we saw in ARC Insulations recently. Anchors include Saint Capital, Ernesta. There is one Aurora SME fund from Kolkata as well. Some new fund, I don't recognize it being earlier in some issues. Coming to the final thing, I think that the market itself is not used for such products, given the long machinery life, almost 10 to 15 years, you can use one single machine. So the growth either comes by you take the market share of others, or maybe you try to export in more products, or maybe you try to diversify into other regions as well domestically. So that is achievable to some extent by what Taurian is at which scale Taurian is currently. So that is some benefit to them. They also are looking to increase these spare sales, which were earlier part of the services contract, but now they have merged them in one contract. So now when they sell their spares, the services are included in them. So that adds some benefit to the customer. So that brings in more customers, sticky customers. So it helps to gain more orders only. So that was about Torian.
Thank
Thank
you.
you.
Thank you, Sachin, for quite quickly covering it and covering it in great detail. It was extensive. I know, Rohit, you had also studied the company. Anything that you want to add or like ask questions? I couldn't really understand the product at a high level when, like, I understand there are some machines which have like 15 years of life, but like anything that you have to add while I try and read the business later.
I'll add just one or two things. I think, and firstly, apologies for my voice. I'm still recovering from a sore throat. But just two things. One is if you see the machines themselves, they seem to be of a very high quality. You can see videos of this online. They don't look like some small SME in India has manufactured it. They actually look very high quality to me. They look almost like they're imported. So I think that's one very good sign. Second is that guidance is quite crazy if they do it, because we have heard everything from 120 to 140 crore and, very high PAT margins. I don't know if that is feasible, but, if they meet those numbers, then this company is cheap on an very cheap on an FY26 basis. It's not even that expensive on FY25, but it's even cheaper. So yeah, these are like a couple of things that I quite like this company actually.
Got it. With that, let me move forward and talk about the fourth company. That was what our review was of Taurian MPS. With that, we'll kind of move forward and talk about Dev Accelerator. Setting up the company, it's a co-working company, बहुत सारी co-working IT of late IndiCube and the smart works of the world along with office वगैरह जो already थी. But setting up Dev established in 2017, the company provides flexible office spaces including co-working environments. As of May 31st, company serves over 250 clients and has 28 centers across 11 cities in India with 14,000 seats. In terms of the IPO, it's a 143 crore IPO, 143 crore का IPO है, at a market cap of 550 crores. So again, very, very small IPO for a Mainboard IPO, a market cap of 550, just like crazy small. So allotment would be very difficult. इसमें shareholder quota भी है, but पता नहीं कितना छोटा सही होगा वो, like if you think about it. In terms of the FY25 financials, it's a co-working company, so can't really value it on PAT, but they did a revenue of 180 crores and PAT of 1.74. We'll see how to evaluate these companies. In terms of the LM is spent too much. So with that, over to you, Tanmay, to quickly try and talk about DevX.
So Dev Accelerator Limited, popularly known as DevX, is an Ahmedabad-based flexible workspace solutions provider, providing services like managed space, which is like 59% of the revenue, IT, which is 5.2%, designing and execution, roughly 25%, co-working 5.6%, and facility management and payroll management combinedly 5%. The company has got 28 centers across 11 cities with 14,144 seats with a super built up area of 8.6 lakh square feet. So out of this 28, 21 centers are straight lease models, 6 are landlord furnishing models, and 1 is a revenue sharing model. The company has got major concentration towards the tier 2 cities. Like they have got centers in various cities like Mumbai, Pune, Ahmedabad, Gandhinagar, Indore, Jaipur, Udaipur, Rajkot, Delhi NCR and Hyderabad. So mostly some on the tier 1 cities, but others on like tier 2 type of cities. They've got 2 grades of centers. 5 are in the premium category and 23rd are in the standard category. At roughly and all the centers combined have occupancy of roughly 87%, which is a great occupancy given the industry. The company has served over 250 clients I'll mention some of the marquee clients which they have given in the website and the RHP. This includes Zomato, QX Global, Darwinbox, uh, Wiptly, Persistent, Tim Hortons, IEX, Codal, Horizontal, etc. The company is raising 143 crores, out of which 73.1 crores will be spent towards capex for fit outs of new proposed centers. 35 crores towards debt repayment and 55 crores towards GCP. So GCP amount is, I feel, slightly higher and could have been on a more organized way. From the IPO proceeds, the company is spending 73 crores for building of 4 new centers, 2 in Ahmedabad, 1 in Pune and 1 in Chennai. And this would add like 6.6 lakh, another, super built, 6.6 lakh plus additional 44,000. So, but if you just look at company's complete expansion plans, which is like internal accruals plus debt plus IPO proceeds, they are looking at roughly 17 new centers, total expansion, like 28 plus 17, 1 in Surat, 1 in Sydney, Australia, 4 in Pune and 11 in Ahmedabad. So that would add like 8.6 lakh built up area plus 2.8 lakh and 14,144 seats plus 3,200. Coming on its financials, so you need to hear it very carefully, ठीक है? Because co-working होता है, उस सब में अलग multiples होते हैं. So FY23 the company did a revenue of 71 crores. पर PAT की बात करूंगा ही नहीं because that is irrelevant. I'll talk on the cash PAT directly. Cash PAT is 20.5 crores, ठीक है? 71 के revenue पे 20.5 crores का cash PAT. FY24 पे 110 crore का revenue and cash PAT of 54.6 crores. And FY25 the company did a revenue of 179 crores and cash PAT of 35.7 crores. So if you look, 24 was a one-off year where EBITDA margin was like 59-60%, and there was also a deferred tax credit of like 9 crores. So that will get reduced, some other income components, some pent-up EBITDA margin. So that should get normalized. उस पे कम बात करेंगे. We'll talk more on FY25. So if we look at proper cash pad, it looks like 54.7, but 19 crore का other income है. ठीक है? If you just discount that, 35.7 crore का cash pad है. Company is coming at 550 crore का MCAP. So on cash pad basis, it is coming at like 15.5 types ka cash pad multiple. If you come on its peers, Office is trading at 25 to 30 times. Smartworks and Indigo are trading at 35 to 40 times, roughly 40 times. So it is coming on 15.4 times. Now one might say it is cheap. It is cheap, but you need to understand two things. First, इसका पूरा revenue कोई आपका co-working से नहीं आ रहा है, so you need to understand the difference between co-working and managed space. People speak co-working as a synonym for both the things, but managed space में क्या होता है? Earlier there it is a demand, there it is a supply. ठीक है? Let's say Zomato comes and says कि मुझे 100 seats चाहिए, फिर मैं Zomato के लिए customized center बनाऊंगा, then I lease him to like basis on the contract 3 से 5 साल के लिए मैं उसको वो lease कर दूंगा, या फिर मतलब I'll keep that much space for Zomato. But co-working में क्या होता है? Already I have built my inventory, like सामने से वो लाइक वी आर ऑलरेडी बिल्ड अ सप्लाई, सामने से डिमांड आता है, देन वी से कि आप ये स्पेस आपके लिए आपका वॉट एवर इज द गिवन टाइम फ्रेम. सो मैनेज स्पेस कंट्रीब्यूट रफली आई गेस 55% टाइप का है, 59%, एंड इफ यू लुक एट कोवर्किंग 5.6%. सो द कोर वर्कस्पेस सोल्यूशन इज लाइक 65%. बाकी का जो है उसमें आपका डिजाइनिंग वगैरह आ गया, फर्नीचर आ गया, फिट आउट्स का सारा काम आ गया, आईटी आ गया, पेरोल आ गया, मैनेज अपना ये वर्कफोर्स सॉल्यूशंस हो गया. तो दैट डू नॉट फेच मच मल्टीपल. सो like 15.4 पे इट लुक्स चीपर, बट इट इज नॉट वेरी चीप गिवन बिकॉज इसको उस बड़े कंपनीज की तरह वैल्यूएशन कभी मिलेगा ही नहीं. गुड थिंग इज गिवन द टियर 2 कंसेंट्रेशन, द एक्सपेंसेस ऑन द PNL आर वेरी लेस. सो अभी मैं थोड़ा PNL पे बात कर लेता हूँ. तो लाइक इन अदर कंपनीज इट वाज गिवन कि आपका डेप्रिसिएशन अमोर्टाइजेशन के नीचे आपका लीज लायबिलिटी क्लासिफाई हो रहा था. सो इट वाज लाइक डेप्रिसिएशन ऑफ राइट ऑफ यूज ऑफ असेट्स, उसका एक डेप्रिसिएशन होता है और उसके अंदर लीज लाइबिलिटीज हुआ करते थे. इन दिस कंपनी उन्होंने फाइनेंस कॉस्ट में ही लीज लाइबिलिटीज दिखाई है, और जो डेप्रिसिएशन और राइट ऑफ यूज असेट्स है दैट इज नॉन कैश इन नेचर. तो आपको उस तरीके से देखना पड़ेगा, क्योंकि स्मार्टवर्क्स और इंडिग्यूब का अलग था, इसका थोड़ा अलग है. बट लाइक आई फील बैड कि कंपनी ने आरएचपी के अंदर कैश एबिट ये बनाया ही नहीं, बाकी दोनों ने बनाया था. सो इफ दैट कुड हैव बीन गिवन, शायद क्लैरिटी बहुत ज्यादा होता, बिकॉज वो गैप अकाउंटिंग, फिर वो इंडेस 2022 से वो सारा चेंजेस हुआ है, रेंट पेमेंट्स एंड लीज का. सो दैट इज अ बिट हैसल टू अंडरस्टैंड फॉर अ नॉर्मल इन्वेस्टर और अ पर्सन हु डजंट have much time to give upon, but they haven't mentioned in the RHP. But if I'm trying to make out the numbers, तो 15.5 टाइम टाइप का आता है. So I feel like I would say reasonably valued. Not it is good, well valued. So earlier this company was expected to bring its IPO at like 750, 800 crore valuation. Now they are coming at 550. So I feel there is decent scope kept. मैं बहुत सस्ता नहीं बोलूंगा, but there is enough scope kept कि भाई थोड़े बहुत पैसे बन जाएंगे इसके अंदर. लाइक और अगर आप देखें तो इनका एक इंटरेस्टिंग चीज मैंने देखी कि द कंपनी हैज गॉट इन्वेस्टमेंट इन अ company which has got a stake in like fractional property kind of like entity है. So I don't have much clarity because I'm not a technical person into it, but fractional property के कुछ तो entity में इसका stake पड़ा हुआ है. So if it comes to monetization, I just tried to look the value of that in like one of the websites, उसके कुछ 80-100 करोड़ का value आ रहा था. So in case company wants to monetize it, दैट इक्विटी इन्फ्यूजन कैन ब्रिंग अ ग्रेट ग्रोथ. लाइक 550 करोड़ के कंपनी में 140 में से मान लो इशू एक्सपेंस 15 करोड़ टाइप का है, तो 130 तो जेब में आएगा, 125 130 एंड गिवन अनदर 100. लाइक इट कम्स इन एन्युटी, इट कम्स डायरेक्टली, इट कम्स अप टू 2 years. आई हैव नो आइडिया. वो एक चीज है. एंड इनके और 2 सब्सिडरी, उसमें एक में दे आर डूइंग आई गेस दिस फिट आउट्स का सारा कुछ थ्रेड करके कुछ तो है इनका, तो उससे वो दूसरे कंपनीज के लिए भी करने वाले. दैट हैज बीन दैट इज ग्रोइंग, दैट बिजनेस आल्सो ग्रोइंग. सो company is trying to do something more than the co-working, but like time will tell, because the scale of this company is very small. Like 160-170 crore का revenue बहुत छोटा होता है, and 25 have technically have got a like lot of hit on the margins. So if you just look at co-working का खाली growth, तो it is like a roughly 30% type of growth, 30-35% type, which is in line with the peers, larger peers, those who have got 1,000 crore, 500 crore kind of revenue. उन्होंने भी 25 से 30% दिया है, and industry has grown in roughly 20-23%. So इतना growth तो आना ही है. So like इसमें 2 और चीजें हैं. Like first is the listed company Dev Information Technology owns roughly like I guess 15%, 12-13% post IPO. They had sold like 6-7% stake before the DRHP had got filed. After DRHP they had sold. So I'm not able to understand कि दोनों में क्या connection है. Don't know, some strategic partnership or what, I don't know. And Mr. Uttam Chandan has been common in both the companies. So इस पे एक है, एंड वी डोंट नो कि शायद, बिकॉज सी एंड ऑफ द डे आपका देव 200 करोड़ के मार्केट कैप का एक आईटी कंपनी है, और उनका स्टेक का वैल्यू खाली मोटा मोटी आई फील 70-80 करोड़ का है. इफ दे कम टू मोनेटाइज, द स्टॉक माइट फील सम हिट. सो एंड बहुत सारा प्री आईपीओ हो रखा है, तो some of the companies who got Cat 2, they might sell on day one. We have no idea because Cat 2 में lock in नहीं है, तो and eventually the pre-IPO holders will come to sell on their stake because they are, I guess, I say roughly 20%-30% profit पे and some listing होगा. Like I'm just assuming होगा, and after that तो they will be sitting on good gains, so there will always be some liquidity or supply into this counter. ओवरऑल कंपनी अच्छा है. प्रमोटर स्टेक इज आई गेस क्वाइट लो, 35% टाइप का ही स्टेक है. पोस्ट टाइप 35-40% बॉल पार्क. आई एम नॉट एबल टू रिमेंबर द एग्जैक्ट फिगर, बट 35-40% के बीच में कोई तो फिगर है. डिसेंटली वैल्यूड, गुड कंपनी, गुड स्पेस. कोई कुछ भी बोल ले, इतना क्राउडी हो रहा है, बट द कंपनीज आर शोइंग ग्रेट ग्रोथ एंड दे आर हैविंग गुड expansion plans. I won't value them on your IndyCube and SmartWorks and office, offices of the world के multiples पे, but 15 times is not expensive at all. ठीक है, decently priced. So I feel they have kept some room and should be looked upon.
Got it. Thanks, Tanmay. I somehow still find it very funny when you try and explain to me the difference between co-working and managed space. कि एक में पहले से बना दिया है तब डिमांड आती है, और दूसरे में डिमांड आती है तब बनाते हैं. I think that's all marketing, giving out spaces to rent, right? But yeah, different opinion. Like 14,000 seats and yet just 15,000 rupees, 15 CR rent per year, per month seems pretty low to me. Like जब मैं देखा 14,000 seats and I just did some maths, the numbers somehow don't seem to Makes sense to me. I'll just have to read a bit more in order to understand. But yeah,
No, the
uh,
finance cost, I'll tell you, the finance cost is at 44.5 crores. उसमें से your proper interest cost is 13 crores. बाकी सारा lease liability का payment है, rental payments है. So it is like ballpark 20 to 30 crores.
got it.
I'll tell you one more point यार. अभी मैंने कहा ना कैश टू स्टेटमेंट देख रहा था, तो इन्होंने क्या किया है, फाइनेंस कॉस्ट 44.5 का माइनस दिखाया है और उन्होंने प्रिंसिपल पेमेंट ऑफ लीज लाइबिलिटी भी 34.1 का माइनस दिखाया है. बट देन 34.1 एक ही जगह पे हो सकता है, दैट इज डिप्रिसिएशन अमोर्टाइजेशन. बट जब मैं उस पे जाता हूँ, फिर वो बोलते हैं कि आप नोट नंबर देखो, 2B देखो. 2B पे गया तो बोलता है नोट नंबर 43 देखो, 43 पे कुछ दिया ही नहीं है. तो आई एम नॉट एबल टू अंडरस्टैंड कि ये 34 का फिगर आ कहां से रहा है यार. थोड़ा सा ना आर में क्लैरिटी कम है यार इनके, मतलब और शायद बेटर काम हो सकता था. सो लाइक आई स्टिल नो, आई हैव नॉट गॉट कंप्लीट क्लैरिटी. क्या वो जो मेरे को 45 करोड़ 54 करोड़ का जो डिप्रेशन अमाउंट है वो कंप्लीट नॉन कैश है या उसमें कुछ कैश है भी है, कैश आइटम भी है. सो आई नीड टू फिगर दैट आउट. बट इफ देयर इज सम कैश आइटम इन इट, इट इज एक्सपेंसिव फॉर श्योर. एक 34 में से अगर 24 भी होगा जो कैश है तो वो महंगा हो जाएगा ईपीओ बहुत ज्यादा. So I need to figure it out, but mostly it should be non-cash in nature. Given at depreciation on write-off usage of assets, तो मेरे को नहीं लगता है कैश एक्सपेंस होना चाहिए. But in cash flow they have shown minus. तो मेरे को देखना पड़ेगा इन्होंने क्या कर रखा है. बट कैश एबिट का कोई ये नहीं है. सो आरएचपी शायद और बेहतर हो सकती है यार, थोड़ा पुअर आरएचपी इसका.
Got it. Got it. नहीं, मैंने थोड़ी सी मैथ्स करी. I was just trying to do the maths. 14,000 seats, 14 CR rent per month, 14 CR revenue per month. So it ends up to 10,000 rupees per seat. ठीक है, which makes sense. Which in fact is higher than your IndiCubes of the world, right? IndiCube does 8,800 rupees and Office does like 6,600 rupees per
नहीं,
seat, right?
इसमें
So
एक ये भी है ना कि आपका जो
वो तीन चार अलग-अलग एंगल हैं, components and divisions है. Is that the reason? Sorry.
हाँ, सो
Go.
इनका इफ यू लुक एट रेवेन्यू की आप देखो तो आई गेस आपका जो प्रॉपर कोवर्किंग का रेवेन्यू दैट शुड बी लाइक 180 का 65% कितना है, मतलब मोटा मोटी 120 करोड़ ही आ रहा है कोवर्किंग से. एंड सो सीट्स आर लाइक 14,000 टाइप्स, तो मोटा मोटी 8,500 टाइप का रियलाइजेशन है. सो इट इज लाइक डिसेंट. बट आई एम नॉट एबल टू रिमेम्बर स्मार्टवर्क्स का कितना था, बट 8,500 इज डिसेंट, नॉट बैड. पर टीयर 2 है गिवन, तो शायद रियलाइजेशन कम ही होगा. बट अभी वो मुझे समझ नहीं आ रहा कि सिडनी में क्यों जा रहे हैं सेंटर डालने. सो वी नीड टू चेक इट आउट.
Couldn't understand. The company is too small, but has big plans. Maybe with that, we'll leave this company here and then kind of move forward and talk about the one last company, which is Urban Clap. Setting up Urban Company. Incorporated in 2014, company is a technology-driven full-stack online marketplace offering home and beauty services. I don't think I need I need to introduce a lot of people to Urban Company who would have at least either used their services या फिर आपने at least उनकी ads वगैरह देखी होंगी, right? Like for housing maids, massages, and barbers. Basically, all home services, home and beauty services. The company platforms enables consumers to book services such as cleaning, plumbing, electrical work, appliance repair, beauty treatment, massage therapy, delivered by trained background verified professionals. I know they are big in AC repair as well, and then they also have a water purifier segment which they had entered in some time back and is doing decent from my understanding. In terms of the IPO, it's a 1900 crore IPO, out of which 472 crores का fresh issue है, mostly OFS है, जो promoters हैं, जो earlier VCs हैं, जिनका fund life अभी खत्म हो रहा है, they are taking an exit. Around 1450 crores का OFS है. Market cap 14,800 crores है. So 10% dilution. No, not so 10% dilution in terms of stake. In terms of FY25 financials, मतलब dilution not in fresh because a lot of it is secondary, right? Because of OFS है. FY25 financials की बात करूँ तो revenue 1,260 crores है और PAT 240 crores है. I want to understand कि इसमें से कितना one time है. Maybe we'll check with Rohit when he's explaining the company. But at least at a high level, it's coming at 50p trailing. If I just take whatever the PAT is on face value. In terms of the LM is Kotak, Morgan Stanley, Goldman Sachs, and JM. So with that, over to you, Rohit, to talk about Urban Company, and I'm sure everyone will have a few views. And from what I was speaking with you, your views might be slightly contrary to what everyone's saying. So go ahead.
Thanks, Manish. Again, just highlighting that I'm having some trouble with my voice, so I'll keep this efficient, but I'll also try and be comprehensive. And I hope I'm audible. So one thing I'll say, in the last 24 hours, I've had 3 different people ask me for my view on this company, and none of them are IPO people. So clearly, this is, I think, there's a lot of buzz for this company, which is good to see. As Manish said, I think everyone knows what they do. We would have used it. They are an app, at least for us. As a consumer, they are basically an app where you can order a wide range of home and beauty services. Anything that, and at least their vision is anything that you want to do at home, you will use an urban company. So this could be things like cleaning, pest control, massages, beauty, barber, any kind of carpentry. You mentioned AC repair, all of these things. So they have all of this in one place. Individually, you might not use any of these services more than once in a few months, sometimes once in a year. But if you have all of these put together, there should be enough repeat use case for the product to be sticky and for Urban Company as a brand to linger in the customer's mind. To be fair, in my view, these guys have almost invented a segment for themselves. So this is coming from a little bit of my experience also, back in 2014, when Urban Company started, there was no real peer for this company globally. Even in the US, there were a couple of companies which didn't really succeed. They were not doing very well. Eventually, both of them kind of got acqui-hired, Handy and TaskRabbit. And when Urban Company started, there were a lot of doubts as to why this would succeed in India. But of course, there are some very structural things about India that are different. I'll come to that. But so this company earns its revenues from 3 segments. There's a 4th which they've added in this last quarter. But the 3 core segments are their India consumer services, which is all of the things I just spoke about. There is their international business, which is the same thing that they do in India, but internationally, which they have 3 markets. And the third thing is the segment that they call native, which is where they sell some consumer durables. So they sell, today they sell smart locks and they sell water purifiers, both of which are linked to their services business. That's how they got into these categories. But I believe they want to get into more and more such sort of home products. So that's a, different unlock for the business. There's a 4th segment called Insta Health, which is a very hot, it's the quick commerce equivalent for services. So I'll sort of cover each of these quickly, but I'll also touch on Insta Health. So the first one, which is India consumer service. So apart from the obvious thing they do, which is you book a barber and he comes to your house and he cuts your hair, they do 2 more things. One is they train each of these people. So this is not as simple as, say, a food delivery. Because remember that in this case, the person is going to enter your home. He's not just going to ring the bell, give you something and leave. He's actually going to be inside your house for 30, 40 minutes. So the person who comes requires a lot more training, a lot more capability. Plus there is, of course, a higher skill in what the person is doing. So they have almost 220 training centers across India. The second thing that they do here is, apart from, of course, the core services, they also sell that, a person who's coming, they sell him some tools and consumables. So think of, the actual equipment that barber will use, shaving cream and, things to clean and all of that. And they sell those products. So all put together, they made around 880 crore from this segment last year with a 10% EBITDA. So this is actually a cash cow for them. The second segment is international. So it's, like I said, it's the bit above, but they also operate in UAE, Singapore and Saudi Arabia through a joint venture. Idea is that they pick markets with an Indian diaspora. So there is some affinity. They did about 150 crore, but this is a burning business for them today. The third segment is native, which is that selling of the physical products, which I think is quite an interesting segment. It's because you firstly don't have to sell this on an Amazon. You will also sell it on Amazon, but you can also sell it on Urban Company's, own app, which means you don't pay all of the fees that you would on a third party platform. And then there is a, natural fitment because you get a purifier from them. And it's the same Urban Company guy who comes and also services that purifier. You buy a lock from them, it's the Urban Company guy who comes and fits that lock. So there is it's basically going to the full value chain. This segment did about 116 crore and is also growing very fast, but it's also currently burning. The last segment, which started in Q1, is Insta Help, which is where probably some of the hype also comes in, which is your 15-minute quick commerce type. You need a maid urgently, someone to clean the dishes. You'll get a help in like 15 minutes. It seems like a luxury, but anyone who's lived in an urban city and maybe does not stay in a gated community will probably find the need for something like this. If a maid doesn't show up or they need to find a new one. And clearly this is something where there's a lot of interest, at least. We'll see how it works out. But this is the fourth segment, which is going to burn like crazy. And I'll come to that because I've got a sense of the numbers also going forward. So I'll quickly cover what I like and don't like. So what I like is, firstly, very strong network effects kind of business. More customers, more service providers, which means more customers, more choice. So, and if you, as you add it across all service categories, it's kind of a no-brainer. The second thing is they seem to be genuinely adding value, at least as per their claims. They're saying that service professionals that are associated with the company's platform earn 30 to 40% more than a service professional who's not associated with any platform. So, which means that someone who comes on their platform gets a lot more work, and therefore they can charge the commissions and so on and so forth. But ultimately they're uplifting and giving sort of dignified work to those people. The next thing is they have very high retention. So you can see it in their cohorts. You get 1x revenue from somebody in year 1. By year 5, year 6, you're getting 2x the revenue from that same person. So which means that you acquire somebody once, you don't have to acquire him again. You're only acquiring incremental customers. And the last bit is that, they're almost like a monopoly. So it's not a true monopoly the way Swiggy, Zomato are actual duopolies, because in this case, the alternative of, say, calling a service provider home is not as difficult as, you going and getting the food yourself from a restaurant. But there is nobody else who has done this in India and survived and built any scale. So what they've done is very impressive. It requires a lot of focus on training, on quality, on the customer experience. So whatever it is, they've done a really good job, and there is nobody else, anyone who's used to an online service, there is no one else that anyone can use. So all of these, makes this a very high moat business. The risks, there are a couple of obvious ones. One is, people can take the relationship offline. If you get a barber, you can tell him to come and cut your hair next time, or carpenter and so on. And all of us have done this. And the company has a bunch of strategies to stop this. I would suggest you look at the RHP, where they kind of explain this. The service professionals also are broadly earning a fixed amount around 300 rupees per hour. So that number is not going up. I'm not sure why that is. But I would imagine that they need to find a way to get more, as service professionals, spend more time on the platform to earn more. And, fundamentally, gig economy is always under the risk of regulator. But yeah, that's a problem for Swiggy, Zomato, for all of these guys. From a number standpoint, so they've been growing at 30-35% consistently. Last year, they grew at about 38%. They hit almost 1150 crore. I think at a PAT level, they showed some 230 odd crore PAT, but of that, deferred tax was 200 crore. Plus other income itself, because of the amount of cash they have in their books, other income itself was about 100 crore. So even if I include other income, but if you remove the deferred tax, which is definitely a one-time thing, because other income will always be there, they did some 30 crore PAT. But I think, the number is honestly irrelevant. For a business like this, you're never going to be valued on P multiples right now. You'll be valued on some future, arbitrary P number that people will assign. Today, this company, such companies get valued on sales, on a sales multiple. So urban companies coming at around 12 times, 11.6 times on a trailing basis. I'll cover two more things and then I'll jump to the projections. So there is a very, very good anchor book. I think, as you would expect, this is a one-of-one business. There is nothing else like it. So all the top, FIIs, mutual funds, all the big name Indian funds with all the big name investors, or these big name fund managers, everyone is in this company. The promoters are also very highly educated, skilled, from top, education and top companies in the past. Now currently the markets are being extremely kind to tech businesses, because obviously there is moat, there is growth. But I think today we don't have the equivalent of what the world has from an AI standpoint, that everyone is running after the AI theme globally. India doesn't have it. And the next best thing that we have is new age tech, which is the Zomatos and Paytms of the world. We had a similar phase back in 21-22 when Zomato, Nykaa and all came at unreal valuations, which at the time seemed okay. And of course, they came down to earth and eventually they grew so much that they caught up to those valuations. Now, this company, I've seen some projections which they had given to some analysts over the month or two ago. They're broadly projecting to continue to grow at around 30% year on year. So you can say that they can do around 1,500 crore in FY26, maybe 1,900 crore in FY27. I am not expecting FY26 to be actually, even though they're PAT positive this year, I'm actually expecting FY26 again to be a burn year because of the investment that they intend to make in InstaHealth. So market may or may not like that. Market may be aware of it, but when the numbers come and it comes negative, people will obviously, I can already imagine how it will open the next day. And the projections are quite, like if I just look at those projections alone, the company is coming at, 15 times EBITDA FY31. I'm not kidding. And even if this company opens at a 40% pop, let's just take the GMP as a, standard for now as a benchmark. If it opens at a 40 or 50% pop, it would be coming at based on company's projections at a 23 times FY31 EBITDA or like 35-40 times FY31 PE, which is beyond my comprehension. Now, if I just look at it on a price to sales, Zomato trades at trailing 13 times with a 65% growth year on year. Swiggy trades at 6 times sales with a 45-50% year on year growth. Nykaa, which is more of a consumer products business, so it has higher margins, trades at 8 times with a 25-27% growth. Urban Company is coming at 12x and they're projecting to grow at 30%, which itself seems okay. It seems in line with what the market is giving to these kind of businesses. And you can say that it's a one-of-one business, unique. It's not competing, like say Zomato, Swiggy are competing with each other and therefore, hurting their own margins. Plus, there's a whole bunch of Amazon, Flipkarts, which are all competing with them. So that way, Urban Company is a nice, neat niche for itself. There's no doubt that, these companies are here to stay. The company will grow. It will do well for, 3-5 years. Whether the valuations today justify that, especially with a listing pop, justify that is what people have to decide for themselves. I personally think as long as this tech wave lasts and, all your tech companies are getting these kind of valuations, it's an slam dunk apply and hold. The moment growth reduces below 25%, I've noticed that these kind of companies people just forget them. Like FirstCry is the best example. Suddenly its growth went from 20-22% to 10-12%. And it is being valued at 3 times sales and not this 7, 8, 10 times sales. So overall, the time right now is absolutely fantastic to be a tech business. Whether you're Bluestone, whether you're Aether, all of the Zinca Logistics all came with with hardly any subscription, and everyone is up 30, 40, 50, 60% from IPO price. And they've done well. They're growing, which is something the market is craving. I think Urban Company is absolute. I will definitely be applying and I will try and hold it as well. Subject to the first quarter that they're not able to grow. I think that to me will be the sign that suddenly the market will decide to bring its valuations down. Otherwise, honestly, with companies like this, no valuation multiple is right. Why is Zomato 13x? It's just an arbitrary number. So be very quick with these kind of companies in case the tide turns. But as long as growth is there, I feel the market will give it a good multiple, and it's worth applying. The moment it crosses that 40-50% pop, it starts looking unbelievably expensive to me. So that's where I will start getting very jittery. Manish, I cannot hear you.
I guess he's not speaking. So I just saw the balance sheet. 1,000 crore के cash पे बैठी है company, and they are raising like
I think
another 400 crore fresh issue.
I saw that. The last round that they raised, they've not spent that money, which is good in a way. They've not been one of those ultra high burn companies. They've always been moderate burn. But you can also see that their valuation has not really grown from their last private round very significantly. Some of their, rounds that happened in 2019, 2018, वहाँ से the valuation is not up a lot. Very limited kind of growth if you look at it in an IRR standpoint. So hardly 8-9%. But
What
I
was
think the
the last
markets are,
valuation?
yeah, I don't remember now. I have to check. I think I remember seeing कि शायद Tiger Global या कुछ उनका exit IRR is some 8-9%. So they've invested 6 years ago and they're exiting with a 9% IRR, which is pretty sad.
Okay. I would like to add one small thing. The company has also done, I guess, कुछ 280-290 crores का secondary sale except the IPO. Okay. तो technically ये 2200 crore का IPO मान लो, and all was bought by SBI Mutual Fund, and एक 7-8 crore का कोई तो नया fund था वो लेके गया, बाकी majority it was SBI Mutual Fund. वो एक था.
But SBI is flushed with liquidity, so they are just buying for that only.
ये भी ठीक है. But yes, like I feel I can imagine some kind of a block deal immediately after listing, because ठीक है, valuation post listing should be on a stretchy note. So if I look on the GOV part, it is like priced at 3.5 times का FY25 and like 3 times 2.8 times FY26 GOV. So like ठीक है, not extremely expensive, but after like 30-40% of a pop, it will be on a very, very expensive note, given the growth should not be like beyond, like the best growth I can expect in FY26 is like 30%. Uske upar, I don't feel it is poised to grow beyond that.
I think
At
in
the basis,
their own projections only, they are not even saying they'll grow faster than this. So I don't think there's any reason to expect further growth than that. And I remember when Nykaa came in 2021, it came at 20 times, if I'm not mistaken, or 18 times sales. And then it listed 2x. And then it died
that
actually.
was a different time altogether. Yeah. IPO funding and all
just
that
imagine,
was complete craze.
Today, if this company lists at a 50% pop, it will be at 18 times sales. So you're actually reaching those levels. So I'm just a bit concerned about the valuation for a company that's growing 35%. Zomato gets 13x with a 65-70% year-on-year growth. So I still think it's a one-of-one business, so it'll get a premium for that. Somewhere the market will draw a line and stop giving it. It's just one of those which will list and probably do very well post-listing also for a short period of time, and then it might just correct or stay there for some time. If I had to guess, that's what I would guess would happen.
Mm-hmm.
Can you guys
Yes,
hear me?
yes.
Audible now.
Now we can.
Okay, perfect. So last time, Rohit, you said that your guess was that something which will list well, do well, and then go down was Aditya Infotech. It doesn't seem to be stopping.
But I think there also I said until guidance. And they gave guidance. Like it was staying at around 1,000, and then they did one CNBC interview and they gave guidance, which is what was missing for most of us, pre-IPO investors who are reliant on RHVs that don't give you any further information. The day he gave that guidance on CNBC, 30-35% grow karunga, PAT will go up, some crazy number he said. Next day, it went from 1,000 to it hit a UC, 2 UCs in a row and stuff. So that initial move towards all of those companies like MBL and everyone, every HFT in India was playing in those counters for 3-4 days.
But तब तक तो बेच दिया था यार मैंने. So the time the guidance came wasn't very helpful.
The guidance came, I think, 2 weeks later. Yeah.
Yeah. But good. With that, we are almost towards the end of the episode. It's been a long episode, 80 minutes. Anything that we have in terms of conclusion? Otherwise, we have covered the 3 main board issues and the 2 SMEs as well. Next week is relatively lighter. We have one company on main board, which is Euro Pratik, and then we have a couple of SMEs which we'll cover for next week. But yeah, with that, we will probably wrap up the episode today, and then we'll hopefully see you next week. Thank you so much, everyone, for joining. Bye.
Thank you, everyone.
Thank
Thank
you.
you.